Welcome to the channel, traders. My name is Justice. We are doing this again. The previous stream crashed. The audio was not responsive, but I hope this one the audio is actually working fine. So my name is Justice, and I am the owner of Call to Trade. Right. So we'll be trading today, and yeah, today was just you know I woke up just in time, but getting a taxi back here was difficult, right? As in, like, there was so many challenges I had to face until I arrived, and also this audio. So I feel like my whole London has been taken. But again, I will just analyze with you and see what opportunities that we might have missed out on, or if there's still some yet to take place, right? Um, we will. Can I just check if I am audible? Right. Yes, I am audible. This is much better. So let's see if there was any opportunity for today, right? So we've got let's see, we've got gold here, right? We just want to see what happened, what is the story here, if there's a story even to begin with, right? And um, so we just let me remove these arrows of this was a winning trade that we took yesterday, so which was good. Um, put this here. So we can take this here, place it there. So that's practically our previous daily range, right? Low and high, right? So we are still within the range. So that's okay. And then for today, we were ending about somewhere here. All right. And let's see. Asia for the past two sessions, it's been trendy. Hey, it's been trendy. That's how it looks like here. It's actually being trendy. So what do we see? All right. Let's see. What do we see? So that's our previous quarter there. London is also taken out. London is like taken out previous high, so which is our Asia. London trending potentially. It could potentially trend. I'm seeing it potentially carry a trend, but it could range as well. Looking at where we opened and what price is doing right now. On the hour, do we have anything that could be drawing price lower? Any form of price action? Let's see the 4 hour, then we can check. Okay. I don't have anything here. No, I still don't have anything at the moment. Just looking at this guy here. So let me just give me a second here. I just plot um, what we have. I hope you are having a good morning. I hope you're having a good morning. Um, Remember, um, we are trading two Bulenox accounts, and if you want to register using my link, it's actually below the description of this video. So um, and our objective is actually to pass these accounts here. In fact, is to get our drawdown here to pass them here and make the first withdrawal here, right? While you are here. That's uh, that's like the objective. Um, Remember the drawdown was due to the error which I had made by leaving orders. So I found a better way of executing orders and making sure um, I don't have any orders left running so that I don't come back the next day to a surprise. So um, yeah, it's just by on the platform because I'm using Ninja Trader, right? Ninja Trader is the one that is I'm using to execute my trades on, right? One of the interesting things about um, Ninja Trader is I feel like the fact that platform is external, there is just as trading direct and trading view. I don't know. There's some sort of weight and gravity that it has that allows you to just be stable. I don't know. For example, if you have to ask yourself, why do other big traders, right? Why are they actually using? If you look at the ones with the biggest payouts, maybe in Apex or whatever platform that there is, why are they? What platform are they using? They're actually using Ninja Trader. So, and again, Ninja Trader is the only platform um, I've been able to withdraw from, right? The only payout I've ever had, which is about this time last year. Yeah. So I'll probably make a video on that. Good morning, Sam. I see you are here. Um, no, yesterday was good. Yesterday was good. I hope you got to fix your internet issue that you were facing. But yeah, yesterday was actually good, man. Um, so we are hoping for a good day today. Today there is CPI. So if you actually look at the economic calendar, if we look at the economic calendar, what do we see here? We see, let's see. We've got core CPI, CPI month to month, CPI year to year. So like that's going to be at half eight. That's in New York time, half eight New York time, and then in our time it's going to be half two, right? That is South African time, right? So um, we are not going to trade CPI, but why are we looking forward to it is the after effect, right? There are opportunities that are presented after CPI. Even if we are able to tell the direction or we know where it's going to go, it's always better to trade the after effect. Um, why? Because you're still trading your same setup, right? The same setup that you know, and CPI is not every day. NFP is not every day. I mean, those things they come about once a month, right? Each of them. So if you get used to that juice, when it comes to trading normally, you are not going to be able to appreciate a normal trade, right? And also just the fact that you're not given the opportunity to manage your trade well. I mean, even if you've got a stop loss, you will get slipped. Does not matter what broker you are using. It doesn't matter even if you're using the most expensive broker, you will get slipped because that is how the market works. You will get slipped. So it's always better, unless if you intentionally go in knowing, right, that anything can happen there. Yeah. But again, that that then defeats the purpose of trading. That's where the thin line is between gambling and trading. Trading, you are working off stats that you know or stats that you have relied on, that you've worked on by back testing, forward testing, uh, collecting that data, data collection, right, and creating an urge out of, sorry, creating an edge out of the data that you've collected, right? And not just collected, but also have gathered using um, by you actually being involved in the market, right? So one of the things I found interesting, I came to understand and learn was just, I think it was about 2 days ago, I was watching the podcast of it was Wakwa and Dave teaches. Okay, wait, I'm now referring to something else. Okay, I'll point that out. Let me go back. Another thing I also found, this was in the podcast of Reese, where there was words of wisdom, where there was Trader Kane. That's a good podcast. Trader Kane, and there was Jade Cap, Kyle, and then there was Uma Rashford. I'm saying Rashford. Uh, I'm not going to pronounce it. But yes, that was Uma. And that podcast, one of the things that was interesting was how they spoke about urge, as in like edge is not right, just trading, as in like your strategy, like your win rate and your risk is still well combined. It's not only that, but it also involves your mental capital. Excuse me. It also involves your mental capital, right? As in your psychological, the way you know yourself, knowing, okay, when this happens, I should act this way, right? Or if I make an error, or if I don't follow my rules, whatever it is, right? Or anything miscellaneous takes place, knowing how to handle yourself in that situation, um, yeah, knowing how to handle yourself in that situation is part of your urge, right? So I found that really interesting because we think that okay, our edge is only found um, or is only what's this, is only located in what do you call this, in just strategy, right? Accompanied with its win rate and risk is to reward. No, your edge also has to do with the way you handle yourself um, with emotions. So um, we just I was just double checking on my side here to see if there's any opportunities that could come. But I think it is safe for us to say this New York, I'm saying New York, this London, we weren't part of it, right? We weren't part of it. Look at yesterday's trade. I mean, this was a very good management trade that we did, that we ended up having a BE on. Trade idea, you can see price did eventually drop, but all of this is not healthy. It's not healthy. It's not something for you to be part of, right? Being like, it's always good to come after, like right now, and look over and see, okay, this is what happened. Being a spectator, you can learn a lot from being a spectator. You can learn a lot from just being a spectator, an observer of the market, right? So um, that is the nice thing about um, being able to see what took place yesterday. Yeah, I am I am happy with that. I'm happy with that, right? So let's see something here on my side. Okay, so NASDAQ. What is this setup here? Is there anything that we should be interested in, right? Or any setup? So if you go on the 15, bellwether time frame, someone can say this is a fair value gap, but don't see that holding. It's not going to hold at all. I don't see it holding. In fact, I see price potentially carrying on going to the upside. So if we do have an opportunity to go to the upside, mm, see, all of this here is something to get involved if there is some form of clear, um, some form of clear uh, uh, setup, right? That that you're drawing liquidity, you know where price is supposed to be going to. But at the moment, I don't see that. I'm just framing or dressing up uh, this. We can see we opened, we took out our previous daily high, we are back in. So it's either we'll come and retrace and go down, or we could reverse and go take out the high. At the moment, I don't see, I would have said we are going for that high, but um, for us to go to for that high, the question is where we are reversing. Was it a high probability area in order for us to actually go up, right? Like, is there something that say price should actually reverse and go back up? So those are some of things we need to be considerate of, right, when analyzing that price is reversing. But is it reversing at a familiar area, at an area you would have expected price to actually reverse, or it is something else that's just taking place, right? So, um, excuse me. Okay, interesting. Yeah, this does look like a high probability area. This would have block here to actually go up. Interesting, 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 interesting. And what time was that? That was like at 1 a.m. Hmm. Okay. Uh, let's see if we can divide today, right? So today, and just look at our quarters for today. Uh, okay, so we've taken out that there. So yeah, we will need to be an observer at the moment. I don't see where we can join. Yeah, my bias is more bullish. Yeah, my bias is more bullish. Yes. But if your bias is bullish, doesn't mean you should just join a trade, right? It actually means that you should see if an opportunity to go long is given, right? As in, like, you get to see an opportunity to actually go long. All right. So, um, I don't see much at the moment. I don't see much. Look at the high there. So it's just good to be an observer. I think at a time like this, what is more interesting to look for, maybe if price does create like that, right, pull back and go up, maybe we get in here, the objective to go above or to go out around there, but it will need to be specific, right? It needs to be something we're actually familiar with. Otherwise, not just any retracement, we want price to come into it there, into that area. So um let's double check something here. Okay, let's see. While we wait, I guess we could even look at other instruments like US30. All right, we can look at US30. Let's see what is US30 has. So this from yesterday. We can remove that, and then let's put a bit of see the 4 hour if there's anything, nothing. Yeah, this is a range. I mean, knowing and seeing what's happening here, right? seeing what is happening here, this is what you should expect before a high uh, economic event takes place, right? Like a three-star important news that takes place. Price will range. It will range and then it will expand, right? So, but in that range doesn't mean there's no opportunities. That is one of the things that now I can refer to the podcast of Wakwa and Dave, right? Where they were actually, where Dave was actually talking about um, in a range, if you're able to actually break it down, if you spend time in a range, you will be able to learn uh, price action, right? What is actually taking place inside. What was interesting for me was that he found this profitability in Asia. I have never seen anyone do that. I have never seen anyone do that, and that is something to actually acknowledge and say, yeah, that is something interesting. So you can see that actually just proves that the market is the same anywhere and everywhere. If you wanted to trade in afternoon session, spend time there and then you'll be able to learn something. There will always be something. I mean, the whole of 2022 ICT mentorship is focused, it's solely focused on um, the afternoon session. Yeah, it's all in the afternoon session, right? So, um, and it's not like what's been taught there, you can't see it in the in New York, like morning session or London. No, excuse me. So I hope my audio is not loud. My back audio is not loud. I'm just gonna put a bit lower then. Okay. So anyway, we are also in a range here. We are in a range, and uh, phew, let's just see the side what is taking place here. Let's see what is taking place. Um, okay, let's dress it up. Let's dress it up, and as much as we're in a range, let's dress it up so we can actually see um, how much you can actually tell us, right? So again, highlighting our previous daily high and low. Um, we can have this here, then we can have that there. See where the SMT is taking place. NQ took out that high or our previous daily high, while you see that's it there, while 30 did not. So um, those are some of them, some of um, the some interesting things that you should actually take note if you're an SMT trader. You can see that was SMT, but you should just know how to use it. In fact, you can't be an SMT trader. It doesn't make sense to be an SMT trader because it's not like you're only trading SMT. You're just looking for SMT, you're getting in, and you're not looking at price action. You're not looking at order blocks, fair value gaps, or market structure, or any or price action itself. You can't be an SMT trader. My point is, if you use SMT as one of your confluences to your trade idea, you can use that as an indicator to whatever trade idea that may be presented at that time, right? So we can also see here, we also did sweep our previous quarter here, and yes, we did sweep our previous quarter, and yeah, we are in a range, guys. We're in a range. We just have to wait. Hence, I'm more excited for today because I know after the economic event, we'll watch together the CPI. We'll watch it, and then after that, we will spot the opportunities that are presented after the news. And you will see there will be a lot. There will be a lot. You just have to be able to spot them, and you should have already analyzed and looked at what instruments that may have something interesting, right? So you can see here we took out this one and took out that one there. Okay, that's okay. Um, okay, back to NASDAQ. So we're just gonna go on the 5, and we want to focus in here in the session for today. So we're seeing we've got this breakout structure here, right? See, we've got this relatively called lows, highs, sorry, here, and we had taken our price action here. So you can see we took out our price action right here, and then relatively highs there. So question is, are we going to do that and carry on going up, or we carry on going down? Right. So I would like price to potentially trade in. I'm not happy with the way this was presented. I'm not happy with that. Let's see here on this other side if um, there's something what we could work with, right? No, there's nothing here. Um, I don't see anything here on the other side, yeah. So, you know, one of the things that also price can do is not even give that pullback. It can just engineer liquidity as it goes up, just powers itself, right? It doesn't need to come back and get the power all the way from the bottom there. It can choose to say, ah, I'll just, what's this? I'll just carry on, right? You can just tap, go in, tap, go in, tap, go in, right? So if that does take place, we don't have to again be worried much. At 20 past, if we don't have a setup, we would have completely closed London, right? As in, like, no setup. We are no longer interested in looking for any setup until New York comes through. So, um, hmm, gold is looking interesting. Gold is looking interesting. So, question is, did we just break here, this structure here, excuse me, in order for us just to retrace, similar thing, to retrace, go up, or doesn't matter if it's here or there, or we're about to go back down, right? So just want to have a look and see here if there is anything that we could expect from gold. Mm, and then if there is, then we'll be getting in a setup. Otherwise, you know, mm, classics. Okay, I'm seeing some a potential setup, so we might be part of a setup. Just double check, see if other confluences are there. Um, Okay. From where it is now, could potentially reverse and carry on going up. So let's see. So if we can have price, just not double check, then we see if we are okay. Mm, yeah. So like we said, we could either a reversal or a retrace. And I am looking which one it is that we are going to have. Uh, at the moment, I was looking to go up. Honestly, I was looking to go up, but I am seeing price saying otherwise, right? It's saying we could actually drop. Yeah, yeah. So I am seeing us potentially drop. So I've got it set up. I am waiting just for Spencer Nectar. Silver. Okay, we will look at silver. But gold, I'm having a setup here, potential setup for us to drop. I want price to, there's a market structure shift, a verified market structure shift taking place. Let's see, did we take out this low? Yeah, these are relatively good lows. Yeah, I'm seeing a potential drop. Uh, let's see, let's see, let's see. Okay, this is getting more interesting. It's getting more interesting. Let's see. Uh-huh. Okay. Okay, we'll be looking for shorts. We'll be looking for shorts. This is going to be a very short-term trade. Uh, yeah, it'll be a short-term trade. Uh, from here to there. Okay, I'm gonna calculate my risk. So I'm looking forward for price to come about here, and then we can drop and target the lows here. It's a short term. See where gold made the last break of structure, then it went up, causing a market structure shift to chalk. Why did it not go further down to that unmitigated OB and FEG? Okay, we will talk about that now. I just want to set up for this trade, this potential trade that we may have, and then we will talk about that. So we've got what? We've got this here. Okay, let's take Q and place it there. The execution. So I'm looking forward for something like this here. Let me show you. But again, I need a confirmation, guys. We are not just going to enter blindly about what's in here. We won't enter blindly. The stop loss there. then so um you won't be getting in blindly, right? So let's see, what else do we need here to confirm? So we've got this, we've got that, the setup is ready. Okay, let's see. I haven't short gold yet, but you will see. I will, when I do short, you see it there on on the the Ninja Trader accounts there. So still waiting for a confirmation, and we will be in the short. We'll be in the short. Let's see here. Let's see if we want to put this here. Okay. I will short soon. Soon you'll see if it does arrive. If it does arrive where we want it to arrive, which is exactly at that point there, we will short. But again, if it does not, um, yeah, if it does not, doesn't arrive, right? There's nothing we can do about that. So, let's see this what. Just want to make sure I'm prepared for the setup. I don't want it to miss me. So I'm putting everything, I'm putting alerts on my side as well. So that when it does arrive, we are going to be part of the trade. Okay, this account, is it ready? Yep, it is ready. Let's duplicate that tab. Oh, close you, and then we duplicate this guy. Hmm. Hmm. Okay, let's see if we have to get in this here. How many contracts will we be using? If we use one is small, two is close, three is small, likely. So probably use two because here we've got a limit of two contracts at the moment. Yes, the market is overall bullish. That is right. So in a bullish, so depending if you are a day trader, all right, a swing trader, as much as the market may be bullish, right? If you are able to differentiate the difference between the opportunities, remember you're talking about a daily bias, right? Which is it being bullish, but there's also an hourly bias. There's also a 4-hour bias, right? There's also a 50 minutes bias. So the goal is being able to get in a trade, knowing where the draw on liquidity is for that bias, where that bias is. It's going to allow you, or it's going to help you be able to execute, get in and get out. So if you're a day trader, you practically can't hold your trades overnight. So meaning you should be looking for opportunities for that day, right? So um, that though, that what you say there is good because um, also this is a gem, one of the most interesting things that takes place whenever there's a high economic event, right? Day, right? Like especially the big three, like FOMC, NFP, and CPI, right? PPI sometimes is as volatile, but with those top three, what usually takes place is that the drawn liquidity price gravitates to or trades to, it trades towards the daily draw on liquidity, not the intraday or the day setup, but it could even be a swing liquidity that it can actually trade towards. Okay, with the way it's doing what it's doing, and also my time is very important to be in a trade. I am no longer going to be looking forward to execute this trade. If it works out, we should be okay with that, right? If it doesn't work out, it's fine as well. Yes, the CPI today, Spencer. There is CPI today. Um, where is Sam? Okay, Sam, you had asked the question. You had said, you see where gold. Okay, on one time frame, are you talking about? I hope maybe you're talking about this here. You're saying the break of structure. This is the last break of structure that we just had. So you say you see where gold made the last break of structure. Then it went up, causing a market a chalk. So from okay, what time frame are you talking? And then like are you referencing from? Because this is a break of structure, but from this time frame that we have, we don't have a chalk yet or a market structure shift taking place yet. Unless if you are talking about this break of structure, then we retrace back and then we have a chalk here. But if you can make it a bit, the 5 minutes, okay. So we can see if you're talking about 5 minutes, I don't see a chalk here. There is no chalk here. I don't see a chalk, right? I am not seeing a chalk. The only chalk, which is the change of character, or as smart money refers to it, this one here. If we are talking about this, then you say what? Chalk, why did it not go further down to that unmitigated OB with a fair value gap? So I am guessing you're talking about this order block and the fair value gap as well. Um, so look, being able to differentiate structure, like market structure, this market structure, right? This market structure, when I'm talking about market structure, not market structure, I'm just talking about normal market structure. This market structure from here to there to here to there, being able to differentiate it, right, versus something a bit much cleaner. If you look at maybe from here to there to up here to there to there to there, that's a much cleaner market structure versus this here. For me, I don't see this as a break of structure. A break of structure also has um, its uh, uh, factors of confluences. I think maybe that would make sense. A break of structure has its own factors of confluences. If you what makes this more different than this? Here you can see actually the structure. Inside this here, we've got structure. So this break of structure, if we're going to take this break of structure into consideration, it won't be on this time frame, but it will be on a higher time frame, because on this time frame, we've got about 1, 2, 3 break of structures. So why should this break of structure have more significance to the other ones that we have? So in order for it to have some sort of significance, we should focus on the higher time frame. The 15 minutes would make more sense, where we've got a cleaner structure. Um, where we've got a cleaner structure, right? The cleaner structure, it allows us to be able to see where we can expect price to actually draw back or retrace back to. Versus if we are inside the structure, then this is no longer a break of structure. This may now be a sweep, or it may be taking out a previous session high, a previous daily high, or a previous significant swing high. Therefore, you start getting setups like I was anticipating, right? Setups that I was anticipating, because now this was now acting as a previous daily high. I don't know if that makes sense. This was now acting as a previous daily high. Therefore, the setups that you get in here are setups within here to retrace. This could be a retrace or a reversal, right? It could be a retracement to go up or a reversal. But the setup you get involved in there is because this is now your significant high or significant low versus you calling it a break of structure. Then, if you're going to call this a break of structure, the only time you should be in this time frame is if you're looking for executions, if you're looking for um, price for entry areas. Otherwise, if you're on the 15 minutes, the best in the 15 minutes, this the 15 and the 1, this is where you can now consider this a break of structure. This is now a break of structure. So what are we saying in a nutshell? A break of structure can also be a high probability swing, right? As in like a previous session swing or previous quarter swing or previous whatever uh, sessions, whatever swing point it can be. But it needs to be in the relative time frame, right? In the, or should I say, in the relevant time frame. Yeah, relevant. I think relevant makes more sense because you cannot use a break of structure of the daily and then because then you're in the 5 minutes and then we break a break of structure on the 5 minutes, then we consider price to retrace. No. So understanding retracements, when do they actually take place, right? Do they take place? Understanding them relative to the time frame that it is being presented, it allows you to be able to have a better um, bias or a better frame of a setup or whatever setup that you are potentially expecting to take place. As we are talking now, I am seeing um, something here from, I think, is it NASDAQ? Spencer had said silver. Silver, we will look at it, but the spread on silver is not good, regardless of whatever it is that you are trading. But we will look at it, right? We will look at it as something that can assist us to get involved in this setup. Um, let's see here where price come in here. So we need to go to 5. Okay. Okay. Sorry guys. I'm seeing something here, and it's 22 past, guys. Regardless of whatever I'm seeing, we need to stick to our rules, right? We need to stick to our rules. Our rules are the ones that protect us and rely on the system versus what we can see. So, even if the setup works out or not, we should be content with that. If we are content with that, what it does is it's going to help us build a strong and stable psycho like a mental state, right? Our psychology it gets strengthened, and the more it gets strengthened, the better trader you become because you are able to follow the rules. And why are you following those rules, and where are those rules built from? They are built from the strategy, the win rate, the risk is to reward, which you got when you were data collecting, when you were back testing, when you were forward testing. And I mean, when I mean data collection, I mean like you can actually, if you can actually print out that data, that will be even much better, right? Where you can actually see it, touch it, and be able to look at it. If you can't, there are journals online where you can actually collect your data, but you need to make sure that you collect your data. When you do collect your data, I'm a big advocate for data collection because before I execute a trade, it needs to meet specific requirements, right? It could be 1, 2, 3, 4, 5, and then I will get in 6, 7, 8. But I need to have 1, 2, 3, 4, 5 in order for me to get in the trade. But to know and see the different variations that the market will still present 1, 2, 3, 4, 5. It could give you 1, 2, 3, 4, 5 now in Roman numerals, and you should be able to spot, oh, this is 1, this is 2, this is 3, this is 4. But if you don't have that data to actually look at it, you are not going to be able to. You'll be able to. You start studying patterns, but you'll not be able to study price action. You won't be able to actually see the price action, because once you study patterns, everything would look like a market structure shift, while it's actually not a market structure shift. Everything will look like a chalk, while it's actually not a chalk, or it will look like a fair value gap, while it's actually not a fair value gap, or an order block, while it's actually not an order block, right? Um, I mean, everything that we need is actually here by being able to spend time and collect that data. If we are able to collect that data, we will be able to sorry, we'll be able to improve on our edge. We'll be able to become better traders. So again, I want to show you what I was expecting, even though we're not going to be part of it, right? I was expecting price to come, take out this low here, and then now I want it to reverse somewhere here. And then from there, we can trade lower. This is practically the same setup that we took yesterday from gold, our winning trade, right? But again, guys, we stick to time. Time is there to protect us, and it's not there to hinder us. It's there to yield us the best results, right? The results that you actually got, sticking to that you got while you are studying, while you are actually focusing, while you are back testing, collecting that data, while you are building that edge, following your rules are the pathway to be able to actually receive, not just for you to have those things. I mean, there is a two part. There is hindsight, right? And I believe hindsight is actually the best teacher. There's hindsight if you are able to actually use hindsight the correct way. There's hindsight, and then there is live trading, right? And there's a gap. I mean, it's very easy to come back after the market is done, whatever is done, and say, oh, yeah, it went to this other block and blah, 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 blah. It's very easy to auction the market, to talk the market, but to be part of the trade before that actually took place in real time, there is a gap, a huge gap that needs to be closed, right? And as you do close the trade, I'm saying the trade, that gap, or how do you close the gap? You close that gap by spending enough time looking at the market, collecting that data, and being a spectator intentionally, not after it has happened. You say, I was a spectator. There's a difference. There's a difference um, when you say, I'm going to be a spectator, and after something's happened, or I was a spectator. Because the difference is when you intentionally say, I'm going to be a spectator, what it actually means that you are intentionally looking, you're attentive, you're actually seeing what the market's what the market is doing. So other than that, um, yeah, we will end this session here. We will meet in New York. New York is going to go down. Thank you for joining us, Sam. Spencer, thank you for joining us as well. Is it Spencer? Sorry, is it Space Nectar? Sorry, saying Spencer. Space Nectar, thank you for joining us. If you're new to the channel, subscribe. And we, again, the objective of these streams is for us to pass these accounts, in fact, go out of drawdown from these accounts, pass them, make our first withdrawal, and yeah, just to show that trading is not something that happens by luck, but it's actually something you intentionally do, right? And there is a system that can be followed. The same way there's a system in anything that you do. You know, if I take out the garbage and put it in the bin, and take that dustbin and put it maybe on Thursdays when the garbage, like when the garbage trucks comes through, the dustbin will go, right? It'll be empty. But if you don't take out the garbage, where or how is that garbage truck going to take your garbage, right? From what bin? Because now that affects even the bin from even going out of the house to the street or outside the road where the truck comes and collects. So everything is intentional that we do, and everything is piled up upon the basics, right? The most important things are piled up below the basics. Live channel, thank you for joining us again. I saw you yesterday and the day before. I think, yeah, I gotta take trades where we are sure of not forcing trades. Yeah, yeah, you don't force trades. It's better for a trade to leave you um, when you are forcing than to force it all, right? If you if it leaves you, say I'm going to be a spectator, it's going to be a learning moment, right? And not frustrates, not frustrates. So anyway, guys, thank you for joining us. We'll see you in excuse me, in New York, the CPI today. We will watch it happen. If there's a setup before CPI, because from New York, we've got about 1 hour 30 minutes. If there's a setup before that, that's okay. But what potentially can happen is we could range. We could end up ranging the whole of New York. We could end up ranging, I'm saying New York, the whole of London, or just before, just or should I say, just before the economic event, just before CPI, we could range, right? Usually that's what takes place. Um, so we'll just be an observer and we'll see what the market is for us. All right, guys, we'll see you in New York, and thank you for joining. And don't forget to like the video and subscribe and share the video too. All right.